Hello there. Welcome back to my channel. In this video, I want to look at the preparation of the bank reconciliation statement, whereby we are going to start by preparing the cash receipts journal and the cash payment journal. So we are going to start by updating them, and then later on we prepare the bank reconciliation statement. So we should take note of the relationship that exists between the CRJ, CPJ, and the bank reconciliation statement. That what appears on the credit side of the bank statement should appear in the cash receipts journal, and what appears on the debit side of the bank statement should be in the cash payments journal. So we take note of that. In terms of our question reads that the information appeared in the books of Donald Traders for May 2023. On the required part, first part, calculate the correct bank account balance by completing the table provided in the answer book. And then that part is got 12 marks. Then second part is prepare the bank reconciliation statement on 31 May 2023 with 7 marks. So we're going to start by going through the information that we have. We are given information A, which is extract of the bank's reconciliation statement on 3rd April 2023. Remember, this is the bank reconciliation statement at the end of the previous period. We are going to be mainly concerned with this, the final balance that we have here that we are going to use when now calculate the bank balance for the current period. So we proceed with the information that we are given. We are given the notes as part whereby we have got some points that we just need to browse through before you start to answer the question. We have also given provisional totals from the case journals on 31 May 2023. Of course, these are the provisional totals that you're going to start with in your journals. Then you are given information on the bank statement, not in the May 2023 case journals. This information is on the bank statement, but it's not appearing in the case journals, which means this information needs to be updated in the journals. So that's what we have. Then proceeding with our question, we are now given information D, whereby it's information in the May 2023 case journals, not on the statement. So this one is not on the statement, so we need to correct it in the statement. Then on the last part, which is E, the balance estimate statement was R. So it means the opening balance that we're going to start with in the bank reconciliation statement is not given. So it automatically means we're going to find it as a balancing figure. So we are going to start on updating our cash receipts journal and the cash payment journal. So our opening balances have been pre-entered. So we can start looking at the adjustments which needs to be done, whereby so we start with information A, where we have got the extract of the bank reconciliation statement on 3rd April 2023. Then information that is explained in terms of these balances that we are given on this bank reconciliation statement is on the note part. So the first point reads the deposit on 18 April 2023 and EFT number 245 appeared on the bank statement for May 2023 with the correct amounts reflected above. So we have got EFT number 245. So we can just refer back and we see that this is 245. EFT number 245 is here. So this one is being referred to as been now appearing according to what we are being informed there. So we leave that one since it's appearing reflecting the correct amount. So it means it's now correct. Then we go to second point. The deposit on 27 April 2023 appeared on the statement as 5,000 due to counterfeit notes being included in the deposit. So we've got counterfeit notes. Obviously, that's the reason why the whole amount was not taken into consideration. Only 5,000 was taken into consideration. So this amount must be written off as the money will not be covered. So the difference should be written off. So we refer to the deposit on 27 April 2023, whereby we are given it here. 27 April 2023, we're given it as 7,100. But according to information given, it is that only 5,000 was taken. The remainder should be written off. So you're going to say 7,100 minus 5,000. So in that we get 2,100. So the 2,100 is the one that must be written off. So remember, it's a deposit, which means it was in the cash receipts journal according to the previous period. But since we are not, we have to write this amount of, we enter it in the cash payment journal. So we go to the cash payment journal in our 2,100. And we move on to the second point, is saying the deposit on 27 April 2023 appeared on the statement as, so this is the one that we are looking at. Then we'll go to the last point, which is saying EFT 246 was on the May 2023 statement with the correct amount of 6,240. So we go to EFT 246, which is this one. So it is being referred to be appearing with the settlement with the correct amount. So this is the correct amount, 6,250. But if you check there, the amount that is there, 6,750. So if you say 6,750 minus 6,250, so this one is the correct amount. And the one that we have for the bank reconciliation statement is the wrong amount. So what it means is this amount was updated in the bank reconciliation statement in the previous period when it was already appearing in the journals. So in the journals, we entered the wrong figure in the previous period with 500 as the difference. So it was under the cash payment journal, and we entered a bigger figure by 500. So to remove the bigger figure by 500, we go to the cash receipts journal, and we should put our 500 to the cash receipts journal. So we go to another section, and now we have 500 cash receipts journal. And we proceed to the next adjustment. See, this is the last point that we have. So we can proceed. So on the first point, we can just revisit the first point whereby it's saying the deposit on 18 April 2023 and EFT number 245. So we also have a deposit on 18 April 2023, which was also reflecting on the bank statement with the correct amounts. So if you refer back, we've got 18 April, which means this deposit was also correct according to the recent bank statement. So we proceed to the next part whereby we are given the provisional totals from cash journals, which we have already entered. So we go to information C. Information on the bank statement, not in the May 2023 cash journal. So this information needs to be updated in the journals. We've got bank charges. Remember, they will be appearing on the debit side of the bank statement. So they should be in the cash payment journal. So we've got 235 cash payment journal. So we are saying this is CPJ. So we refer to our CPJ, we put our 235. Then the next one, we've got debit order for the monthly insurance. A debit order will be on the debit side again of the bank statement. And obviously, it should go to the CPJ, 1,140. And we go back to the next one, which is a direct deposit by the tenant for rent, 4,600. So this is a direct deposit, and it should be in the cash receipts journal since we are receiving, but in the bank statement should go to the it will be on the credit side. So we are supposed to go to the cash receipts journal. So 4,600 cash receipts journal. So we have 4,600. We move on to the next part whereby we have deposit by data in settlement of account 7,500, but the deposit was 7,030. So we are concerned about the actual amount that was deposited, 7,030. And this is money received, so it goes to the cash receipts journal, which should on the bank statement it will be on the credit side. So we proceed to the cash receipts journal whereby we have 7,030. Then we check in terms of Last one is deposit by Uzu Technical College. This is an error on the statement as the business does not deal with this college. This will be rectified in the next statement. So basically what we are saying is this 15,000 that is on the credit side of the bank statement as a deposit should not be there, as this is an error as indicated here. So it's an error that is affecting the um, bank reconciliation statement. So this is an error that is supposed to go to the bank reconciliation statement of uh, of of 15,000 that we need to remove as an error. Then we move on to the next information given. Now it's now information on the May cash journals, not on the statement. So this is the information not on the statement. So it means we have exhausted all we have for the journals. So we can try to add to get our total for cash receipt journal and cash payment journal. So if you add for cash receipt journal, 76,270 plus 500 plus 4,600 plus 7,030, you get your answer is 88,400. Then on cash payment journal, we're saying 88,625 plus 2,100 plus 235 plus 1,140. You get your total for cash payment journal is 92,100. So for the bank account balance, what we are going to do is we are going to say remember we have got an initial balance that we have for the previous month's bank reconciliation, which was the bank balance at the end of the last period, 8,800. So we are going to say 8,800. Then we add the balance of the cash receipts journal, which is 88,400. This one. Then we now subtract the cash payments journal total, which is minus 92,100. So we calculate it like that, you get your final balance is a positive 5,100. So this is what we have in terms of the bank account balance. So we go to the bank reconciliation, but for the bank reconciliation, we see that on information E, we are being told that the balance SB statement was a question mark, which means we have to find this as a balancing figure as we are given it as a question mark. So we can see that this is our bank reconciliation statement. So we are going to start with balance as per statement. We're going to start with our balance as per statement so we can try to see. Here we are saying it's a question mark, so we don't know whether it's going to be a debit or credit balance. So we can leave it blank, then we'll come back as a balancing figure. So moving on now to our errors that we have, we can just refer back. Remember, we are supposed to start with our outstanding deposits. Outstanding deposits. So we are going to start by checking where we have our outstanding deposits in the question. So if you come here, you would see that we've got outstanding deposits that we have here. We've got this one on 19 May 2023, 11,400. We've got this one for 26 May 2023, 10,800. On information in the May 2023 cash journals, not on the statement. So we can try to post those ones whereby, answer section now we are referring. The first one is 19 May. And the amount is, for 19 May, we've got 11,400. Then we move on to the next one, which is now 26 May, 10,800. 26 May, we have 10,800. So that's what we have. And we check now, the next information that we have is outstanding EFT. Outstanding EFT of number 658, 6,900. So we go and again put that one. And it's number 658. And the amount that we have, 6,900. So it should appear on the debit side, remember? It's an outstanding EFT. We got 6,900. Then we also have that one that needs to be cancelled. This one is an error. It was a deposit by Uzu Technical College, so it is appearing on the credit side as 15,000. So we need to remove it as it is an error on the statement. The business does not deal with this college, so we need to remove it. So by removing it, we go to the opposite side, the debit side. So 15,000 has to be removed as an error on statement, or we can just represent it as an incorrect deposit. So on our answer section, we are saying incorrect deposit, 15,000. So this is what we have, and then with that now we can now balance our account. Remember, we cannot find the balance as per a bank account according to the information we've exhausted. So we are supposed to have our balance as per bank account here. SB bank account. So this balance SB bank account, we cannot find it since we do not have the opening balance. We also have a missing balance at the beginning. So, but we know that this balance it should be the same with the balance that we should be in the on the first part on the calculation of the bank account balance. So we've got 5,100. It's a positive, and we know that if it's a positive, it will be a debit balance in the cash book. It will be a debit balance that we have in the cash book, and the debit balance in the cash book is the same as a credit balance on the bank statement. So in other words, if you go to the bank statement, it will now be a credit balance. So we have got a credit balance. In other words, we are saying we have got a credit of 5,100. That is the balance at the end. So when we have got a credit balance, what it means is that's the side that we have a balance BD in the normal T account. In other words, we are saying if we come to the normal T account, we can just maybe try to present it like this. So we are saying in the normal T account, we have the scenario whereby we will be having your double lines, both sides. So in that case, we remember we have a balance. In this case, let's say this is our bank statement. So obviously we have your balance CD on the debit side, and you also have your balance BD on the credit side. So in this case, since we have discovered that our 5,100 should be a credit balance of the bank statement. It means the scenario that we have is that it is a credit balance like this, and the CD should be on the debit side. So when you are putting it now in the bank reconciliation statement, you put it as a CD. So it's going to go to the debit side. So in other words, we are saying the balance of the bank account is going to come here as 5,100. So that's what we have. From there, we cannot be able to balance our account. We add the debit, we add the total, we see which one is the greater total. But if we add there, we are going to see that the greater total is going to be the debit side with a total of 27,000. We should appear both sides in between the double lines. And then we now say 27,000 minus 10,800 minus 11,100. You should be able to find the balance figure as balance as the statement being. We can try to calculate that one. Whereby we are seeing 27,000. We subtract 10,800. Subtract 11,400. Then you get your balance figure as 4,800. So this is your opening balance as the statement at the beginning. So basically that's what we have. Then we also have information that we also need to respond to. That is on the last part, whereby the first one is saying provide one suggestion on how the problem of counterfeit fake notes can be prevented. So how can we prevent counterfeit which are fake notes? Obviously, we have to install a scanning machine which quickly detects that this is a fake note. So we are saying install a scanning machine. Which quickly detects. So this is the point that you can also put. Then also you can also use a method of encouraging card payments at the till, so that we don't have scenarios of counterfeit notes. Encourage card payments. Can also be a point, but our question is only looking for 1 point. So we go to the second point. Donald was concerned about the outstanding deposit. Provide 2 internal control measures that he can implement to address this concern of outstanding deposits. So outstanding deposit obviously is they are going to be delayed deposits. So how can we make that quicker so that we don't have a scenario of outstanding deposit? So we can implement a system of regular depositing, that is routine depositing. Implement a system of regular depositing. So that may be a solution to the problem that is there. Then on point number 2, we can implement the issue of division of duties, whereby we are saying one worker will work as a control of the other worker, so that there might be reminders that will be initiated along the way. If one who is in charge of going to deposit the money delays, is actually notified of depositing that money. In other words, when division of duties, we are saying that the person collecting and receiving cash is not the same person doing deposit, so that the other one will work as a check on the other one. So this is the points that we have according to the last part, and we can see that this is the last part. Our question has got 35 marks. So thank you for listening, and hopefully the video was helpful. And please, let's take notes. Let's subscribe to our channel. Let's share. Let's meet again in the next video.